Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Ladies and gentlemen, something isn't adding up right now with XRP. And it's not just the price. It's not just the chart. It's what's happening underneath it. Because while most people are focused on daily moves, there are deeper signals starting to show up, and they may matter a lot more than people realize. This doesn't look like a normal movement in the market. It looks like the early stages of something shifting. And if you're only watching price, you might miss the part that actually matters. Welcome back to the Crypto Republic, ladies and gentlemen, where we don't chase price, we position before the move. If you're part of the wolf pack, you already know. Short-term noise, long-term structure. Today, we're breaking down why this XRP shift may look more important than it looks. But to understand it, we need to zoom out first, because you can't understand what's happening with XRP without understanding what's shifting in the system around it. For decades, the global financial system has revolved around one core framework, the US dollar, trade, liquidity, settlement, all flowing through dollar-based rails. But here's where it gets interesting. That system doesn't need to collapse for change to begin. It just needs to stop being the only option. And that may be exactly what we're starting to see right now. Small signals, policy shifts, alternative rails. New settlement behavior on their own, they seem minor. Together, they tell a very different story. And that story is what makes this XRP shift worth paying attention to. I just want to say thank you to everybody that takes the time to like, subscribe, comment, and share these videos. These few things really do help out the channel grow very much, and I salute you. With that being said, let's dissect this, and I hope everyone enjoys today's contents. Let's zoom out all the way first, because you cannot understand XRP without understanding what's happening globally. For decades, the world has operated under a single dominant system, the US dollar, specifically the petrodollar system. Oil gets priced in dollars, global trade flows through dollars. Liquidity flows through dollar-based rails. But here's where it gets interesting. That system isn't collapsing overnight. It's being replaced slowly, piece by piece. Think about the internet. In the early days, most people didn't understand it. They thought it was just for emails, basic websites, nothing serious. But underneath, infrastructure was being built, protocols, fiber networks, data centers. And by the time people realized what was happening, the biggest opportunity had already moved. Transition to today. Now bring that same lens to today. We're seeing countries quietly exploring alternatives to the dollar. Sanctions, geopolitical tensions, trade fragmentations, and even reports suggesting some nations are experimenting with crypto and stablecoins for settlement. Now this part surprised many people, because at first glance, it sounds like noise, but it's not. It's a signal. Why this matters? Because once a system starts getting tested, it doesn't go backwards, ladies and gentlemen. It expands. And this is what most investors are missing. This isn't about replacing the dollar overnight. It's about building parallel systems. If you look at a multipolar financial world, and in that world, enter XRP, you don't need one currency to dominate. You need something that connects everything. That's where XRP comes in, not as a replacement, but as a bridge. Let's talk about the infrastructure explanation. The XRP ledger was built for one core function, moving value between different systems, currencies, countries, assets, instantly, efficiently, with minimal friction. Now think about that for a second. If the world is becoming more fragmented, more currencies, more systems, more rails, then the need for a neutral bridge asset increases dramatically. But here's where it gets very interesting. Most people are still looking at XRP like a trade, like a chart, like a short-term opportunity, when in reality it's being positioned as infrastructure. Now let's layer in the macro liquidity shift. Ladies and gentlemen, this is very important because this is critical. For the past few years, we've been in one of the tightest monetary environments in decades. High interest rates, expensive money, low liquidity. That suppressed risk assets, crypto included. Well, now the shift is happening, but now that starts to change. Rates are coming down. Liquidity is beginning to return. And historically, this is when markets don't just move, they accelerate. But the real twist came when we looked at the last move, okay? Bitcoin moved, XRP moved, but the most of the market didn't. That's not a full cycle. That's a selective move driven by catalysts, not liquidity. So what that means in English, ladies and gentlemen, which means the real cycle may not have even started yet. And if that's true, then what we're seeing right now is positioning, not peak. Let's look at the institutional angle. Now let's talk institutions, because this is where the game changes. Institutions don't chase hype. They position based on structure, regulation, liquidity, and they move slowly until they don't. So if you look at XRP positioning, XRP has spent years doing something most cryptos haven't, targeting institutional use, banks, payment systems, liquidity providers, not retail speculation, real-world integration. And this is what most investors are completely missing. By the time institutions move at scale, it's already obvious. And when it's obvious, the opportunity is smaller. Let's talk regulations, ladies and gentlemen. Now layer in regulation. Stay with me. For years, uncertainty held the market back. But that's changing. Frameworks are forming. Clarity is improving. And institutions are watching closely because they're starting to get that Gucci conviction and Gucci clarity. They ain't going to tell us. Here's a key idea. Because once clarity hits, capital flows at scale. So if you look at the technology convergence, let's go one level deeper with me. AI. This is not separate from crypto. It's converging with it. Now, why this matters? AI systems will need to transact, settle, move value autonomously across borders. So if you look at XRP's role, that requires infrastructure. Fast, efficient, scalable. This is where XRP fits naturally. Not as hype, as plumbing. But here's where it gets really interesting. And if even a fraction of global financial activity moves into digital systems, what happens to the infrastructure layer? Well, let's talk about why most people will miss this in some market psychology. It's simple. They focus on certainty. They wait. They hesitate. The truth? But markets don't reward certainty. They reward positioning. So if you look at structure versus price, price is reacting. The system is evolving. And those are not the same things, ladies and gentlemen. You got to let that sink in. Marinate on that, okay? Think about electronic trading. At first, traders resisted it. They stayed in the pits. For one, I remember when the flow of the NYMEX went to electronic trading. But infrastructure shifted, and eventually everything moved electronically. So today's moment, we may be in a similar moment right now, where infrastructure is changing, liquidity is shifting, adoption is starting, but it's not fully recognized yet. So when you combine everything, right, ladies and gentlemen, global financial fragmentation, emerging alternative settlement systems, liquidity returning, institutional repositioning, AI convergence, regulatory clarity, improving, you start to see the bigger picture. So this isn't about XRP price tomorrow or even today. It's about what role it plays in a changing system. So look forward with me for a second, because if the world becomes more multipolar, if value needs to move across different systems, if digital infrastructure becomes essential, then assets designed for that environment become very important. And that's why this shift changes more than you think. If you got value from this breakdown, hit the like button, subscribe if you're part of the Wolfpack, and drop a comment below. Do you think XRP is being positioned as infrastructure or just another asset? Because remember, most people will only understand this after the move. And by then, positioning becomes chasing. Stay sharp, stay ahead, pay attention to what's quiet, and don't get caught up like sushi. Well, I hope everyone's having a great Friday, ladies and gentlemen. Sorry I couldn't be with you guys. I was traveling to meet with customers and clients, and I want to be here every day with you guys. But I want to give a big shout out to Christopher H. and his amazing son, Keelan. You guys are never going to get up like sushi. Keelan, your father loves you very much. He's very, very proud of you. And always understand something, ladies and gentlemen. The key to not getting cut up like sushi is discipline, conviction, Gucci clarity, perspective. We got a great rant right here, ladies and gentlemen. If you're new, this rant comes after every video. So if you found us, welcome. Again, we break everything down. I got a lot to go over. I got to catch up with everybody. Again, I got to catch up. So we're going to go over a lot of things and what we're going forward with this. One quick announcement with the Patreon. I want to welcome all the new members. We will be capping the number at 1,000 people. We can't believe how fast it's grown to about over 500 people in a few months. We won't be able to service everyone. So with that being said, I want to keep on moving. Ladies and gentlemen, with some of the family offices that I was meeting with and that they see that I talk now on YouTube, they asked me if I was a crypto influencer. I didn't really know what that meant. I said, no, I'm a financial mercenary. I enlisted in this business at 15 years old, forged from the fires of the daily financial chaos, survivor having the wounds of financial combat, and the bank account to show improvement. And hence having customers and clients like yourself and your family and the people that you refer us to proves that as well. But being a financial mercenary is about one thing: results, performance, living in the shadows. This is not to showboat to people. This is to be able to do a skill over and over and over again every day. Every day. That's the most important thing to me. Again. And it's like I look at our whole community here. If you found us, then you belong, because you have passed the first test of being a financial mercenary. Patience. You found the channel. You listened to it. Maybe you thought I was an AI personality or not, but you got to the second half of the video and you listened. The patience is the biggest key. So I want to get right into this right away. Ladies and gentlemen, with gold, we couldn't get above 4,800. That's a bad sign. Just giving you the bad news first, okay? You know, we're challenging 4,800, but if you look at this, there's 3 times up here right now. And if you want to call that a triple top, it's really not, but triple tops are made to be broken. That's a rule that I was taught and I followed. So if you look, there's 1, 2, 3, attempts, but it hasn't broken above it. So on a closing basis, you can call it a triple top, but it's not there. But that's the reality of it, okay? You shouldn't really be super bullish with gold until it settles above 4,800 right here, okay? Above 4,800, bets are off, and this market could run to 5,000. Not financial advice, just my opinion. Anyone changes any capacity. But until that happens, respect the trend, which is the upward trend. But remember that, you're not really going to move aggressively here, because if you want my opinion, a lot of the markets, they're in the what-if forest. The what-if forest was something that was taught to me on the floor of the New York Mercantile Exchange. What if this happens? What if that happens? What if this? What if that? That's why I was always saying that the tweets were moving the markets. Again, the tweets are moving the markets, but this should not be making anybody surprised who's been here for a long time. We've been talking about this. If you go back and watch these videos of what we say before things happen, you're so far in the know, you're ready. You got Gucci clarity. You got Gucci conviction. You got your recce. You're coming off the recce's that we're giving, but we got a lot of information to go on. This video may go longer than 35 minutes. I do apologize, but I want to say this. The more I analyze the situation, my Gucci conviction grows. My Gucci clarity intensifies, because we've done the heavy lifting, ladies and gentlemen. Now it's time to get carnivorous. This is my favorite time to be a financial mercenary, when we get carnivorous. A new term, new word. Yes, we may come out with a calendar and words. People have been asking for that. But when it's time to get carnivorous in the financial markets, look out, because return to your seats, ladies and gentlemen. We're about to lose cabin pressure. So getting carnivorous with that Gucci mindset, we are not getting cut up like sushi, because we're the remora, and we're on the next to apex predator, because it's been over 48 hours since this ceasefire, right, was announced. There's 0 inbound tankers are going in. Ladies and gentlemen, and for a generalist, you forget a convenient fact. You need tankers going into this strait, not just coming out to alleviate this choke point. You need it. And this is exactly what I'm talking about. With all these facts and things, I ramble on and on. It does the heavy lifting. Again, and if you look at the strait right now, 12 boats are going through? Oh, my God. But ladies and gentlemen, it's things like this is exactly what I'm talking about, and why I say one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research, and more importantly, how to actually position around all this, come and join us. Over 500 active traders, investors inside the Crypto Republic Desk Monthly. And welcome to all the new members and the members channels. But I want everyone that thinks that they understand what's happening right now to take a step back and listen to this for a second, okay? I need you to listen to this. Everybody thinks that gold is just reacting to the war. They think oil is just reacting to supply shocks. They think markets are volatile. That surface level thinking, because it actually looks at the data, not headlines. You realize something far more dangerous is happening. The system is starting to contract itself and contradict. Gold just dropped nearly 20% from 54.50 to 44.05 in a matter of weeks. At the same time, oil is surging. If you look at crack spreads, oh my God, I love the crack spreads here every day of the week. I love the crack spread. The dollar's ripping higher, and rate cuts almost completely repriced out. That combination should not exist together in a stable macro environment, ladies and gentlemen. It never does, but it does here. And if you don't understand why, you're going to get cut up like sushi. You're going to misprice everything that comes next. Again, the first reveal, and this is important, here's where most people get it totally wrong. They assume gold equals safe haven equals goes up during a war. The data just broke that assumption, ladies and gentlemen. Gold didn't rally during peak escalation. It liquefied hard and liquidated hard. Why? Because capital didn't go to gold. It went somewhere else. The U.S. dollar absorbed the fear, and that changes everything. Because now you're not just dealing with geopolitics. You're dealing with capital hierarchy, and that's big. Again, so if you look at the data escalation, let me show you how deep this goes. We're seeing a 25 basis point cut expectation completely removed from the markets. The 10-year yield's pushing towards 4.3% expectations. U.S. dollar strength overriding every traditional hedge. At the same time, central bank gold demand, which was running near 1,100 tons annually at peak, has started cooling. And here's the part nobody's talking about. That demand wasn't just buying gold. It was a structural shift away from the trust in fiat systems. Let that sink in. Now that flow is pausing, not reversing, it's pausing. It's a big difference, okay? So if you got a paradox, gold bull market still structurally intact, but short-term behavior completely broken. That's not random. That's what happens when liquidity stresses overrides narratives. Let me simplify this. When markets get stressed enough, even the assets people run to for safety, they get sold. They get sold. Write all this down and we'll wind if you have to, because I got a lot to go over. We got the XRP and everything at the end of the ramp. That's massive because they're liquid. Gold didn't fail. It got cashed in. Not financial advice, just my opinion. Everyone takes any capacity. That distinction is everything. So if you look at the gold plus oil relationship breakdown, it goes very deeper because this is where most analysts completely lose the plot. Historically, oil and gold had a relationship. Not perfect, but directional. Now, that relationship is breaking down in real time. We just saw oil spike 12% in a single move. Gold dropped simultaneously. Correlation collapsing towards 0.112. Near long-term lows. This is not noise. That's a regime shift. And when correlations break models, which means most of the market's now flying blind. So what's actually driving all the markets and all this, ladies and gentlemen? It's very easy. It's not just war. It's not just oil. It's not even just rates. It's this. Debt. The debt's out of control. Someone's got to take the credit card away and be on punishment. Punishment, bad. Global debt levels are approaching 100% of GDP in major economies. It's insane. Deficits pushing 6% annually. And here's the mechanisms. Nobody explains properly. When debt gets this high, you lose policy flexibility, which means every shock hits harder, lasts longer, creates second-order effects. That's why this environment feels unstable, because it is, structurally, again. So if you look at the supply-demand shift, this is huge. Let's talk about something even more important. Again, write this down. Write this down. Who is actually buying? Because price isn't driven by demand. It's driven by which demand, huh? Here's what we're seeing. Jewelry demand down 18%. Coin demand, multi-decade lows. Retail getting priced out. But institutional demand still strong. Large bar demand rising. Rock star. ETF inflows reaccelerating. So what does that tell you? This is no longer a retail-driven market. This is institutional positioning. And institutions don't move based on emotion. They move based on liquidity, macro structure, long-term positioning. Again. So now we ask the question that matters, ladies and gentlemen. People ask me this all the time. What happens next? Here's the reality. If oil stabilizes, the dollar weakens even slightly, yields stop rising, then gold doesn't just recover. It accelerates and we get out of the what-if forest. What if that? What if this? What if that? We're talking potential ranges between 4,100 and 5,600 in the same year. That's not volatility. That's an opportunity if you understand it, but only if you understand the structure behind it. Again, this is where the separation happens. It's very important because most people reacting to headlines, FOMO and all kinds of things. I read the comments. XRP goes down when I make a video. I'm sorry. Come and put the hate rate on me. people chase moves and get shaken out during volatility. But the people who actually understand what's happening, they positioning, the flows, the macro structure, they don't react, they anticipate. They see when liquidation is temporary, when narratives are breaking, when capital is rotating. More importantly, they understand when the market's wrong. So right now, the market's in one of those moments where signals are mixed, narratives are broken, volatility is misinterpreted, and randomness. It's not random. It's transitional. And the people who take the time to actually understand what's happening underneath are the same ones positioned before the next move begins. Because by that time, it's obvious it's already too late, ladies and gentlemen. And this is exactly what I talk about going over and over and over again. Why I say one good tip from the pits can easily pay for your entire year subscription. You want the deeper macro research and more importantly, how to actually position around all this? Come and join us. We're over 500 active traders, investors inside the Crypto Republic Desk Monthly. Ladies and gentlemen, do you realize why we're in the what if forest? Now I'm going to break down everything about LNG. This part's so excited. If you're still here, give me a thumbs up. And in the comments, you're still here. I want to know how long you've been a fan of the Crypto Republic in the comments section. How many months have you been watching our channel and how did you find us? Because again, if you found this channel, I salute you. I do. But I want to go over certain things about why I'm in the carnivorous mode and what that means in the what if forest. Because by the time I go through this next tirade about LNG numbers, everything's going to make sense and why the next big place that we're taking advantage of it and LNG and copper. My God, it's fantastic. And you got to be able to take advantage of what's happening right now. You don't understand. You got to live through the chaos that's man-made. And if everybody wants to complain about markets that are being manipulated, why are you not taking advantage of the trading that's going on? Why not? Ask yourself, why not? If you want to learn, come and join us. But these times of man-made chaos enables the astute financial mercenary. And this is the most astute time in my life to be trading through everything. And I'm blown away what's happening because it allows for the one-way directional of moves, of cause and effect if you know where to look. If not, it's just chaos every day at the price pump, at food, listening to blah, 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 blah. We're in the what-if forest, but in times like this, it allows traders to build massive wedges to trade with. My God, you're trading, your stacks of high society grow. If you follow a plan, you're recce, you're disciplined, you get that Gucci conviction, you get that Gucci clarity. My Lord, but we're in the what if forest. What if that? What if this? What if that? To me, the biggest gains are made in the what if forest. Stay with me right now. We're going to take the PhD out of PhD, ladies and gentlemen. There's a major shortage of copper on planet Earth as a result of the war. All the military bases, oil, gas facilities, and infrastructure will have to require an incredible amount of copper. That is going to have to be rebuilt, and there's just not enough copper in the world. But this is big, and this is massive. Write this down. Qatar Energy has engineers back on site at Ras Laffan and has begun phase restart work on the undamaged trains. Headlines are calling it a recovery, but it isn't. 17% of Qatar's LNG capacity, around 20% of what it was put into the global market, is offline for 3 to 5 years. Let that sink in. It's massive, massive, carnivorous. You got to be so carnivorous right here. The ceasefire paused the shooting. It did not repair 2 liquefaction trains, and it did not make the Strait of Hormuz safe for tankers. You got mines in there. You got everything. Qatar Energy language has been very carefully chosen when they do release statements. Again, not financial advice, just my opinion. Engineers are on site. Maintenance is underway. A phased restart of the undamaged trains has begun. Read those words again, what I just said in the transcript, ladies and gentlemen. Undamaged trains. Write this down. The trains that are damaged, trains 4 and 6, those represent 12.8 million tons per year and are not being restarted. They are being reassessed for a 3 to 5 year reconstruction that will cost billions of dollars. Qatar Energy's own CEO confirmed the timeline, the capacity lost in March 18th and 19th. The strikes will not return for years, and a production cannot normalize, while the risks of further attacks remain. Marginal volumes may appear in the spot market within weeks as undamaged trains ramp back up, but the structural loss, the 17% of Qatar's export system, the 20% of global Qatari supply, the long-term contract holders in Italy, Belgium, South Korea, and China were counting on this, gone on a multi-year horizon, ladies and gentlemen, gone. And if you look at right now, Iran hit the pipeline that we spoke about that goes east versus west in Saudi Arabia, so there's no really ceasefire. It's just all words. But again, if you're writing this down, this is the roadmap to easy positioning if you know where to look, ladies and gentlemen. Again, the facts, the recce, the research. Each phase of Qatar's restart takes measurably longer than the last. The structural damage is simply not a near-term story, ladies and gentlemen. In our opinion, the market's being optimistic. The infrastructure is not. So a ceasefire can stop missiles. It cannot fast-track the reconstruction of 2 liquefaction trains and a GTL unit representing $26 billion of installed facilities and $20 billion of annual revenue. The physical reality hasn't moved. The geopolitical narrative hasn't. The ceasefire didn't open up Hormuz either. Even if every undamaged train at Ras Laffan restarted tomorrow at full capacity, Qatari LNG still has to pass through the Strait of Hormuz. The strait remains under Iranian strategic leverage, tolls, mines, everything. Before the strikes, tankers were already being disrupted. The ceasefire, however long it lasts, has not fundamentally changed Iran's ability to restrict flows through the world's single most important energy choke point. The Strait of Hormuz carries approximately 20% of global oil trade and the vast majority of Gulf LNG every single day. So now this is another factoid if you want to write this down. We're going to be going all over this in the Patreon, so everyone who's a member, don't worry. Don't worry, we got you covered. But again, these weird things that I follow makes all the difference when it's showtime. Qatar's Q-Flix and Q-Max tankers are the very vessels that gave it a freight advantage, are sitting at the terminals that cannot guarantee safe transit. They made better structural carriers. Again, I love this industry. It's something I worked in for a very long time, oil shipping, understanding how an oil tanker's got 20-year profitability. The first 12 years pay back the note, the next 8 years you cream. But ladies and gentlemen, until that changes structurally, the risk premium on the Gulf LNG is not going to zero. So how long will the ceasefire last? This weekend's going to be a big test. We're going to see negotiations. The current ceasefire is fragile, broken under pressure rather than from a durable political settlement. History suggests Gulf ceasefires in the middle of active proxy conflicts last weeks, not years. The market's pricing optimism. The physical energy system is not. So what the price told us and what it's saying, Asian spot LNG, JKM, was trading around $10.50 per MMBTU before the strike, a market that expected 2026 to be the first year of multi-year supply glut, as a new and Qatari capacity came online. So within 72 hours of the attacks, JKM had essentially doubled, with trades reported above $25. So huge. European benchmarks moved more than 50% in a single session. Prices have since pulled back towards the low to mid-20s. As the ceasefire was announced and market pricing a partial restart. Ladies and gentlemen, this pullback is tactical. It's a reaction to political event, as far as we're concerned. It's more of the Harry Houdini freak show that's going on. We are with Christopher Columbus, and we have lost sight of land. The structural balance is 12.8 million tons offline. Force majeure declared. Buyers scrambling has not changed. Any analyst telling you LNG is returning to $10.50 needs to explain where the replacement volumes are coming from. I want to know where they're making up for what was destroyed. I don't understand this. This is very important. This is like trying to sail a boat. Don't worry, this is what this is like. We can raise the sail just as high as it was, but the wind is only at half the capacity. So the boat's not going to go as fast. It doesn't matter if we raise the sail just as high. If the wind doesn't come back, we're not going. That's like saying, oh, wow, we put out a fire in the kitchen. There's a nasty little grease fire. We put it out. That doesn't stop the smell of gas coming from the basement. My God. But this is the things that when you pay attention, this is the difference of making or losing money and growing as a financial mercenary. So who fills the gap and when? U.S., the only supplier capable of filling anything close to 12.8 million ton haul on 2 to 3 year horizon. The timing of U.S. capacity additions almost uncomfortably aligned with Qatari's outage. Golden Pass, when we did a whole video on this. Golden Pass Train 1, ironically, at Qatar Energy ExxonMobil joint venture announced first production in late March 2026. We have a whole post in the Patreon about that, about plays. We talked about LNG, how we told that Iran made the whole United States LNG sector. So if you go back, the Puck mine phase is ramping. Corpus Christi Stage 3 is ahead of schedule. Another 15 to 20 million tons per year is coming online between now and the end of 2027. Beyond 2027, Port Arthur LNG, 13.3 MTPA. Rio Grande LNG Phase 1, 18.1 MTPA. CP2 LNG Phase 2, up to 29 MTPA. That's massive. That's going to be a big one. Extend the U.S. build-out into the early 2030s. Alaska, Mozambique, and Argentina at a further 70 to 100 million tons, but that's 2030, of non-Hormuz capacity behind that. None of these projects move molecules through the Gulf. Ladies and gentlemen, what the ceasefire doesn't change, and the two plays that we're going to be following, that we're putting on, You want to know, ladies and gentlemen, and you want to stay ahead of this, do come and join what we're tracking at the Crypto Republic desk monthly in real time. Again, I tell you this, we're following the shifts, positioning, and how this navigates. I tell you this all the time. The goal isn't to react. It's to position before the move. If you take everything I'm talking about and you position now, my God, that's why one good tip from the pit can easily pay for your entire year subscription. So if you want the deeper macro research and learn how to take advantage of all this, come and join almost 500 active traders and investors in the Patreon, ladies and gentlemen. I keep saying this, and this is big because what I just went over, it's not numbers, and I'm not reading a phone book, okay? It's the treasure map to winning trades in a sector for the next 5 to 10 years. And that's the difference of being a financial mercenary. We harness our craft to fight every day on the trading floors, so we can do it every day. It's a skill, ladies and gentlemen. I say people are missing so many things because of that. And, from my vantage point, the market's really still underestimating a lot of things that's happening. I'm about to go into XRP right now. I'm going to go into a lot of different things. I want to make this point right here, ladies and gentlemen. The global supply chains are disrupted. Okay? You're going to see price move back and forth. People are getting caught up like sushi because they don't know how to trade in this environment. There's no discipline. There's not. This is like pike a day for people who have no understanding what they're doing. But why I tell you to carnivorous mode is that we now know, at least with us, anyone retains us any capacity, I know the who, what's, where, and why this is going on. Good enough to go into carnivorous mode, to trade every avenue like this in carnivorous mode. Again, we don't get to go into carnivorous mode very much, right? But once we're there, we take full advantage of this. And anyone who's been trading long enough understands why. Because once you do this day in, day out, you understand. But the global supply chains and the disruption of this magnitude don't translate into immediate shortages. Again, they move slowly, then they're all gone. Cargo already in transit continues to arrive. Inventories built months ago are still being drawn down, and consumers are effectively living off a system that has yet fully replaced in the shock. But structurally, the system is already breaking down beneath the surface. So if this conflict keeps persisting, the adjustment will not be gradual, it will be nonlinear. The global economy is deeply dependent on stable flows of energy inputs, crude oil, natural gas, petrochemicals, and fertilizer. Remove or constrain those inputs, and you're not just impacting one sector, you're compressing the entire economic stack. So in my view, anyone who assumes the system can operate near current levels under these conditions is ignoring how tightly coupled these supply chains are really. And even in a best case scenario where key transit routes open quickly, the damage already done to infrastructure across the region introduces a multi-year recovery timeline. We're no longer talking about temporary dislocations. We're talking about impaired capacity. And importantly, the capacity underpins everything from power generation, manufacturing throughput. So what stands out to me is the escalation direct strikes on critical infrastructure. Facilities like the Hashman gas processing in UAE, central domestic energy distributions have already been taken offline. So ladies and gentlemen, when you look at all of these things, the ripple effects far beyond. That's why we view the current environment not as a single shock, but as a compounding one. Energy markets are absorbing what may be one of the most significant supply disruptions in modern history, or an alignment somewhere else, laid on top of years of pre-existing volatility. This combination is what creates sustained cost pressure, not just spikes, but persistent upward repricing across industries. Energy costs, particularly diesel, are critical transmissions. Look at what's happening right now. If you look back and forth, everything's moving. It's insane. Again, nothing has changed, really. Again, so the costs are there. They propagate throughout the systems. We're already seeing meaningful increases while current levels are manageable. Ladies and gentlemen, once fuel costs cross certain thresholds, they begin to materially alter pricing structures across supply chains. The transmission's already underway. So if you look at logistics providers, shipping companies, and major distribution networks, they introduce fuel surcharges. That's the first visible layer passed through inflation. But what matters more is what comes next, because transportation is embedded in the cost of nearly every physical good. As those surcharges compound, they begin to show up in real retail pricing. Look how much it costs for food now, compressing consumer purchasing further. And this is occurring against the backdrop of an already elevated cost of living environment. Food prices particularly have been rising structurally, even before the geopolitical escalation. So when you look at what's happening, and I find particularly important is, and underappreciated is the disruption of petrochemical supply chains. Materials like MEG, okay, and purified terephthalic acid, PTA, are foundational to modern manufacturing. They sit upstream of basic plastics, packaging, textiles, and a wide range of industrial applications. Ladies and gentlemen, I want you to fully understand something. The market's being moving from point A to point B. At some point, these levels collapse under the understanding of the risk tolerance of the lack of economic input of the data that I just went through before this about LNG. That is a big thing. Right now, you're seeing the market reactions from point A to point B. That's what we are stressing is most important. You're going to have to write that down because look, has anything really changed? If you don't have any oil tankers and vessels going in there, nothing else changes. So ask yourself, has anything just changed or is it optics? Does anybody really think that this is going to stop? No. So, and again, there's times to take advantage. I believe this is one of the biggest times ever to take advantage of these things. And I'm just blown away over what's really happening. It's almost as if you can follow, at least we're following, the timing of what they're doing and why I say with the remora. It's very, very interesting to take advantage of these things. It's almost telegraphed, in my opinion, not financial advice, just my opinion, anyone that retains any capacity. I want to talk about XRP right now. I want to talk about ICP. I want to talk about HBAR. I want to talk about these things, ladies and gentlemen. And this is where I think is very important. The Wall Street Journal op-ed, Treasury Sec Scott Bessent urged lawmakers to pass the Clarity Act. Bessent's urging came on the same day as White House study published finding that stablecoin rewards would have negligible impact on traditional banking. Bessent points out that over the past year, the global market capitalization of digital assets fluctuated between $2 trillion and $3 trillion, adding that nearly 1 in 6 Americans own some form of digital asset. So according to Bessent, crypto is no longer a niche experiment. It's a technology that the world is adopting regardless of which nation chooses to lead. Treasury Secretary, who has previously made high supportive remarks about crypto, including the Bitcoin becoming a store of value, explained that apart from stablecoins, the regulatory framework for digital asset remarks is unclear. Bessent claims that the stablecoin legislation, the Genius Act, can't realize its promise without clarity support. So according to media reports, a sticking point for legislation has been how the bill treats interest and other rewards paid on stablecoins. Incumbent financial institutions have reportedly been against allowing users, to earn interest or rewards on stablecoins, similar to traditional interest on deposits. While many crypto businesses have been supportive, Bessent's op-ed did not address the sticking point of a Council of Economic Advisors who reported found prohibitions on rewards would increase traditional lending only slightly, estimated at 0.02% rise, or roughly $2.1 billion. The report also indicated that most of the effect would occur to a large bank rather than community lenders. It's important. According to the report, a yield prohibition would do very little to protect bank lending while foregoing the infrastructure, consumer benefits, or competitive returns on stablecoin coinings. The report contrasts with the Independent Community Bankers of America, which has argued that explicitly allowing certain stablecoin interest payments could put small banks at risk of losing $1.3 trillion in deposits and USD of $850 billion in loans. So in March, details emerged language in the latest version of the Clarity Act that would limit the ability of users to earn a high yield on their stablecoins. So if you go back, according to CoinDesk, the latest version of Clarity Act would guarantee rewards programs on a narrow basis as long as they don't resemble the interest from banks. Okay, so if you look at it like that, that's very, very big. On the headline, Coinbase and Circle closed down 9% and 20% respectively. So the takeaway in January, Coinbase CEO Brian Armstrong argued that described limitations stablecoin rewards as allowing banks to ban their competition. Having said that, the Trump administration has proven to be highly accommodating towards crypto interests, considering the purpose of the Council of Economic Advisors is to provide the president with objective economic advice. It's likely that the pro-reward report will impact the White House position on the sticking point. Ladies and gentlemen, Hong Kong has issued its first two stablecoin licenses to HSBC and Anchor Point Financial, a Standard Chartered-led joint venture under its stablecoins ordinance, effective August 2025. The license comes with strict KYC rules, and HKD stablecoins will embed compliance checks. So the HKMA, Hong Kong Monetary Authorization, deparized retail central digital bank currency. Very, very important. So according to Coinbase, some parties are considering acquiring selective parts of Gemini's shuttered European and UK operations to secure regulation license rather than the entire exchange. It's unbelievable what's happening, ladies and gentlemen. So if you look at, this is also important, I think. Japan's government amended the Financial Instruments and Exchange Act to classify crypto assets as financial instruments and tightening oversight with bans on insider trading. The new law expands disclosure requirements for insiders and issuers, increased fines for unregistered exchanges. Japan has also plans to legalize crypto ETFs by 2028. Ladies and gentlemen, you want to stay ahead of how all this evolves? This is exactly what we track at the Crypto Republic desk. Okay, real-time shifts, positioning, and how to navigate it as it unfolds. So I keep saying our goal always as financial mercenaries, stay with me. It's not to react. No, it's got to be positioned before all this happens. Again, I say this again. One good tip from the pits can easily pay for your entire year subscription. You want the deeper macro research and learn how to take advantage of all this? Come and join almost 500 active traders and investors in the Patreon, the Crypto Republic Desk monthly, ladies and gentlemen. This content's for informational entertainment purposes only and should not be taken as financial advice ever. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing on why they missed it, telling themselves it'll never happen again. Or you could be the one who saw it behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise. While XRP continues developing behind the scenes and building momentum in broad digital isolates. Stay sharp, stay informed, and accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. Just open your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to Crypto Public. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. I love you all. I'll see you on the front lines. And if you made it to this point, you get the real candy from the bottom Italian ice. I think and this is my opinion and why I'm in carnivorous mode, and I have the Gucci clarity and Gucci conviction, and why we're not getting cut up like sushi. I don't expect this to end anytime soon. In our previous videos, we had said that we thought that certain U.S. military assets were burned, knowing where they were, so that they would take a punt. They would kick this down the road. You have no ships really moving through there or going in there. There's mines they have to fix and pull out of the waterway. Iran hit the pipeline that runs east to west that we talked about in Saudi Arabia. The writing's on the wall with this. How you play something like this, in our opinion, you wait for the proper levels, the real extreme ranges of support and resistance before you do anything. You don't really speculate. I love crack spreads right here with what's going on. There's so many exotic things I love, but I've been doing this my entire life. This is all I know. And I guess this is the time that I was forged to be trading in, and why I advise the people that we advise in any capacity, and they've come to rely on us. And long-term viewers of the channel understand a lot of things. They've watched us grow. I'm proud of everybody here who takes the time to want to learn. The only stupid question is the question not asked. But understand this, right? The world is changing very much. It is. And the future is XRP, ICP, HBAR. It is XLM as well. But why I say this, and this is going to go on, is because eventually they don't report the numbers that we report here on the news because people don't have the attention span and capacity to listen to it. It's no one's fault. It's just the society we live in. The attention spans are low. But if you look at the numbers and the things I talk about and what it affects, it leads to the path. It leads you to the way. We are on the front lines now. There's nothing anyone can do about it. I love you all. Have a great, great Friday evening.